what's going on in real estate. If you are in the market looking for your first home or just an investment property, you should listen up.
This Real Estate Buzz segment is brought to you by McLeod of Associates, a full-service real estate and mortgage firm. It's not about the number of homes we sell, it's about the difference we make in people's lives.
McLeod, thank you so much once again for joining us on Kababayan today.
Good to be here again.
All right,
yeah.
Let's get in the segment right away. Okay. Some questions from viewers, like the last time that you were
Great,
here.
I love
answering.
those.
Yes, okay. This is Marvin from Riverside. Should I use an internet-based mortgage company? Okay.
Hi, Marvin. You know, that's a really good question. Internet-based companies or mortgage internet-based companies are good. The only thing is I'm a true believer in building rapport with the professionals that you're going to be working with, especially in such a big transaction like a purchase of real estate and entrusting so much of your financial situation with them. I really recommend trying to build rapport with that professional. A lot of internet-based companies might not have the same resources, affiliates that a local branch or a mortgage company or a local bank might have. Right. You know, whether it's their relationships with the appraisers or home inspectors, just their local resources.
I would be iffy using that also because you don't see the person face to face, and you're right, you're entrusting so much.
Yes.
But why do people go with internet-based mortgage companies? Do they offer lower rates? Do they? What is it that gets people to work with them?
Well, a lot of big internet-based companies have big marketing, so you'll see all kinds, or you'll see them on commercials and things like advertising and things like that. But not only that, I mean, one thing is it's internet-based, so a lot of people just want to submit paperwork and get it done. But people don't understand the actual, especially if you're a first-time home buyer, the mortgage process is so tedious.
Right.
And once you get in, you'll realize it's so important to have that rapport with that professional.
All right. Another question is from Woodland Hills, Irene. Can I use gift funds as my down payment, or does it need to all come from my own pocket?
Yes, Irene, yes, you can use gift funds. It does not have to come from your own pocket. It can come from gifts from relatives, family. It can be from employers. We had one client where they had an incentive. If you're a first-time home buyer, they were going to give $10,000 to help their employees.
Wow, where is this company? I need to work for them. But also, do you need to declare that it's a gift?
Yeah, the bank will ask. The bank will ask where all the money, whether it's your own funds or gifted funds, they are going to paper trail all of that. So if it's cash, make sure. A lot of people have family members that have cash under a pillow at a house somewhere, and they try to give that. That cannot be used towards a down payment. It needs to be sourced and seasoned for at least a month to 2 months. Yeah. And they want a paper trail every cent that's going to be used towards this down payment.
Yes, because some people do that. Just keep cash under the pillow, under the bed, which is...
So you might as well put that in the bank. If you're planning to buy in maybe 3-4 months, as long as it's been seasoned for enough time, because the bank will ask for maybe the last 2 months bank statements. So as long as it's been in there, then
about 2 months. So season it for 2 months.
Yes. And really quick, you can also use 401k.
So take out a little bit.
A little bit. You don't have to take out everything, but we're noticing more people are, if they're short $5,000, $7,000, they're pulling from their 401k.
All right. And then another thing that I like about McLeod & Associates is there are only a few realtors who can get you a listing before it goes into MLS.
Yes.
Right?
Yes.
And how are realtors able to do that?
Well,
relationships with the banks.
Relationships with the banks. We do have a relationship with one really big bank where, we're an approved broker with them. So anything that is about to hit the market before it gets listed, we actually have access.
And you already have the chance to study if you like the property. Here's one that's coming up in West Covina. Mia, tell us about this property.
Okay, this one is actually not a bank-owned property. This is a short sale, but it's in West Covina. It's going to be listed probably around $380,000. It's really cute. It's like a bungalow-style cozy home. 3-bedroom, 2-bath, a little over 1,400 square feet, and it's a pool home. And it's in West Covina, very near the nice part of West Covina, near Seafood City.
Right. If it's a short sale, do we have to worry about the condition of the property?
You know, this one is not exactly turnkey, can use some cosmetic repairs, but you'll probably get it for a really good deal. Typically, short sales, again, are sold at a discounted price. So you can, you know, even though there might be some fixes,
Right.
you're going to probably get a really good deal on that.
And we've talked about this before. If you have a good realtor, the good realtor can also help you with strategy
Yes.
with that offer because what is that? Inventory is tight.
Yeah, it's a very competitive market.
Right.
I'm sure once this property hits the market, I think we will easily have upwards of 10 to 20.
Right. And you
10 to 20
already have a
offers.
sneak peek at that. Information on the screen once again. 1 minute. Do we still have time to answer one more question? If the house appraises for more than the sales price, can I borrow additional money to help with closing costs?
Okay. Well, the answer is no. The way the banks will, the price that they're going to go by is either your contract price per the purchase agreement or the appraised value, the lower of the two.
Okay.
So if it does get appraised higher, just be happy. You've got some built-in equity,
Right.
but you won't be able to loan against the higher appraised value. Yeah,
okay, I
yeah.
get it.
Now the other side works too. Let's say it gets appraised less than the purchase contract, then the bank will only loan you based off of the lower. So you're going to have to either go back to the seller, negotiate the price
Right,
down, or
right.
come out of pocket with the money.
Well, thank you so
Yeah.
much for answering those questions. Information on the screen once again. That's the number to call if you have any real estate questions, and they will be available to help you, advise you, and do all that. Thank you so much. More power to you.
Thank you.
Entertainment when we return. Don't go away.